Hi, David. Thank you very much for joining us today. Agnico is the third largest gold producer in the world with 11 producing mines globally, but much of the future growth will come from the Canadian operations, and this is where I want to focus, beginning with Malartic. Now that Agnico owns 100% of Malartic, what was the annual production in 2022, and what was the all-in sustaining cost?
Yeah, well, thanks, Jimmy. First of all, thank you for having me here today. It's a real pleasure to be back. Malartic is, in fact, one of the most important operations in Canada, of course, but also for the company as a whole, as we remain very focused on Canada. And the production there last year was about 715,000 ounces. Cost structure, excellent, $663 per ounce on a cash cost basis, and all-in sustaining of $856. So one of the largest and lowest cost operations in the world, most certainly Canada as well.
And a big part of the Malartic story is one of growth associated with Odyssey. And as a reminder to our viewers, Malartic is a very large open pit operation. The Odyssey project is going to take it underground. Can you just provide an overview of exactly what's happening with Odyssey?
Yeah, what's going on there is the Malartic pit is depleting over the next 5 years or so, and we're going underground to the east at, it's actually several deposits. We call them Odyssey, but it's Odyssey, East Malartic, and East Goldie together. And so Malartic will in fact be transitioning from Canada's largest open pit mine a year ago and going to Canada's largest underground mine. In fact, the grade is approximately triple from the underground, but we'll be mining at about 1/3 of the rate, so the gold production should remain about the same. But what's interesting about that is because we're going to be processing it at about 1/3 of the rate, it's a 60,000 ton per day mill, and that means we're going to have excess capacity of about 40,000 tons per day. And that will allow us to bring other sources of ore into that big hungry mill. And I think just a tremendous, tremendous opportunity with very low capital intensity because the mill is already there. And it will allow us to probably actually increase the production through that mill as we put some of our own ore in there and potentially even do some toll milling for other companies in the region.
Interesting. And a big part of developing Odyssey is the shaft construction. Maybe you can just provide an update on what's happening there.
Yeah, so the head frame and all the sinking equipment are built, ready to roll. The main surface infrastructure is also built, and the actual shaft sinking has just begun. So pushing this forward as we speak, and all of that excess mill capacity is why we're so excited about it, but it's also the future growth of the asset. The exploration potential is just tremendous. We're still extending, especially to the east, especially in that parallel zone, East Goldie. It just keeps getting larger, and some of the best intersections we've had are recent intersections. So very, very excited about that potential.
That's a great overview of Malartic. Another asset that was acquired with the Yamana acquisition was an asset called Wasamac. Maybe you can just provide an update of what you're going to do with this asset.
Yeah, so Wasamac's pretty exciting as well because of its proximity to that hungry mill at Malartic. It is just down the Trans-Canada Highway from the Malartic mill. When we acquired it from Yamana, it was already at the feasibility stage. It was about 2.2 million ounces at about 2.5 grams per ton. And it is surface material, so it's got tremendous potential to go into that Malartic mill. And again, back to the grade part of it, the Malartic mill is currently from the open pits mining about 1 gram per ton. And so Wasamac at 2.5 grams per ton, pretty good sweetener there, and gives us more confidence that over time we'll probably be able to actually increase gold production from Malartic, partly because of Wasamac. And there's some other properties in the area, the old Camflo mine, the old LTA property, just to name a couple. And then those are ones we own. You could also get into that toll milling discussion again, and there are several other deposits not owned by us.
I want to move on and discuss Detour. Detour is the largest gold mine in Canada, and to justify this statement, we need to quantify that. What was total annual production in 2022 at Detour, and what was the all-in sustaining cost?
Yeah, so Detour was 732,000 ounces last year. I actually misspoke earlier. It was 2021 that Malartic was the largest producer in Canada, and now it is Detour as of 2022. That was at $647 per ounce cash cost and $965 all-in sustaining cost. So again, very, very competitive, very large asset. And what's exciting at Detour is the potential to actually drive that production rate higher. We're coming out with studies and plans this year that are going to help us describe how we think we could potentially get Detour even to 1 million ounces per year.
Yeah, that would be significant growth. And in order to get to 1 million ounces a year, a big part of this would be exploration work that you're going to be doing. Maybe you can just touch on that.
Yeah, certainly. It's actually a few different parts. There's mill optimization, but there's also expansion of throughput. I think last year the throughput was about 26 million tons of ore. We're able to operate already, we know because we've done it for extended periods, at about 28 million tons on an annualized rate, but it's actually permitted to 32 million tons. So we think over time we'll be able to get there as well, but you're right about the exploration. As we continue to do some in-pit drilling, we're converting resource to reserve over time. But additionally, as we go to the west of this deposit, it has become very clear that there's an extensive underground deposit to the west, and certainly at better grades as well. So it's a really great opportunity, and I think currently the Detour mine life is about 30 more years based on what's been drilled off in reserve today. But I wouldn't be surprised if Detour was still operating 50 or 60 years from now.
David, I want to move on now and discuss the importance of jurisdiction. The importance of jurisdiction has been reinforced in the past year, and an integral part of Agnico's success is staying away from high-risk areas or countries. And maybe you can just tell us why Agnico has adopted this approach.
We've always had this approach. We think mining is hard enough, even in a good jurisdiction like Canada. And so we don't have the skill sets to go to the most difficult parts of the world. And I think it's important to understand that. But additionally, I think the generalist investor really does shy away from political risk. And in 2013, the resource specialist kind of got blown out when the price of gold cratered from $1,800 per ounce. And the generalist investor now has most of the money, and I don't think they want a lot of political risk. So maybe coincidentally, our timing is fantastic. We're the third largest gold producer in the world, but we're also very, very focused in supportive, safe jurisdictions. So I think we have, I'm going to claim cleverly, maneuvered ourselves into a position where we're definitely one of the top 3 choices in the sector in terms of generalist interest. And it's kind of great because Barrick is off doing something completely different. They're going to the difficult parts of the world because they have the skill set to do so. Agnico is 80% of our gold production in Canada, which I think is resonating with investors. And then Newmont's somewhere in the middle. So in fact, investors have a choice amongst the 3 largest gold companies. We're all doing something a little bit different. And I think that's great. But again, we're not going to change our strategy. We're in Mexico, Finland, Australia, and Canada, but 80% of it is in Canada. And frankly, that's on purpose. We like it here. I guess we're biased a bit because we're Canadians, but it's a great, great country to mine in, very supportive. And our operations in Ontario and Quebec support Nunavut very well. It's a great infrastructure. And we really, truly have a major competitive advantage mining in Canada. And I think that is also resonating with the largest investors.
And I want to continue this with this point, but Agnico has 11 producing mines, 5 of which are in the Abitibi Gold Belt area. And after the consolidation of Yamana's assets, Agnico's production from this region will be approximately 2 million ounces. Will Agnico continue to focus on this region going forward, or would you consider other areas within Canada like the Golden Triangle, for example?
Yeah, I think Canada is definitely our country and where we're interested in operating. Heading west, I think that's absolutely something that could happen for this company. We already have investments in the Yukon in a joint venture with Kinross, for example. But I really do believe that we're the largest gold mining company in Canada by far. We produce, I think, more gold than the next 8 companies combined in Canada. So yeah, I think we will continue to expand. But that region, that Abitibi Gold Belt of Ontario and Quebec, is literally our home and the foundation of the company. I think what's most exciting for Agnico right now is that we're a larger company with a great balance sheet. We've got the skill set of any company, but we've also got a great pipeline. And a lot of that pipeline is in Canada, as we discussed at Malartic and Detour, but also in the Kirkland Lake camp in Nunavut with the Hope Bay deposit. We've got so much opportunity. I think we could be busy for the next 10 years without doing any M&A, but also we have the ability to do M&A. So it's a great opportunity to just continue to drive this company forward and, you know, continue to grow the per share metrics that we're so proud of.
And just given the size of Malartic and Detour and the importance of those 2 assets, would you consider selling off some of your other assets, the smaller assets in other countries?
Yeah, that's a question we've had a lot more recently, and I think it's very logical. It is a larger portfolio of assets, and if you treat it like a portfolio, which I'm sure you should, you know, maybe if something new comes in that's higher quality, maybe something that is more mature or lower quality should go out the other end. So I think there is more appetite around here than there has ever been to that divestment, concept. And the ones that are most obvious would be Australia. It's a single asset. As of today, we haven't found Swan Zone 2.0, you know, the very high grade part. So it does have a forecast of a declining gold production profile with a higher cost profile as a result. The Australians are actually very capable and also very optimistic that we're going to find the next high grade zone. But that's the one that it is way all over on its own. So the question is, do you use that as a springboard to do other things in Australia, or do you sell it? And I guess you could say the same thing in Mexico. It used to be our highest margin business, but the gold mines are depleting. And we've now actually added a copper mine, which is great, in a partnership with Teck, which is going to keep our excellent team in Mexico busy. But that's another one. It's eventually it's just going to be a copper mine in Mexico. Could that be sold? I don't know. We actually like copper. And then Finland, I don't know that we would sell Finland just because it's an asset that grows and grows and grows and grows over time as we go to the north, especially, and at depth where, and they even discovered a parallel structure now. So we're just finding lots more gold. I think like Detour, Kittilä could very well be operating 50 years from now. I guess it's a very long answer to a short question, but the answer is maybe we would divest things, but we don't really want to because we like the people so much and we like the regions so much. So it's a hard one.
So you just touched on the fact that you entered into an agreement with Teck. You bought 50% of San Nicolas, which is a copper mine in Mexico. Is copper an area that you would like to grow? Would you consider acquiring assets, copper assets?
Yeah, the way I personally think about this is not so much if it's, you know, doesn't have to be copper, it could be zinc, it could be whatever, frankly. If it's in our backyard and we have a true competitive advantage, then I think Agnico should be involved and exploit that competitive advantage, because that creates the most value for the shareholders. The other angle is, would you want one of the largest mining companies in the world mining a zinc mine right beside one of your operations and probably stealing your employees and disrupting your supplier networks, et cetera, et cetera? And I think obviously the answer is no, you would prefer not to have that. So again, suggesting that if there are good assets in our backyard, we should be aware of them and probably be involved. And I think that's the way we're thinking right now. Just continue to exploit that competitive advantage, because arguably, because we have it, you could make a very competitive bid for some of these assets. And there are some of these assets literally in our backyard in Ontario, Mexico, you mentioned, also in Finland. There's polymetallic in Finland, and actually Australia for that matter too. So we'll see. It's something we're working on, but it's not on the front burner at this point. But it's something that I think if we do find a high quality asset, we would have to seriously consider it.
I want to move on now and discuss your balance sheet and how you will allocate cash flow in this coming year. Are you going to continue to increase your dividend? Would you look at buybacks?
Yeah, we have both of those tools, and it really depends on market conditions, of course. I don't decide on the dividend, but we make recommendations to the board. And the recommendation to the board last quarter was margins are good, operations are good, therefore logically dividend should stay the same. And that's really our strategy. We don't have an equation, and we never have. I think the problem with equations is there would always be some circumstance that your dividend is reduced. And I wouldn't want an equation telling me that. I would rather use some reason and logic. It's a strategic message to the market as well, what you do with your dividend. And so I'd like to control that. And our intention generally is to keep it the same until you raise it, then keep it the same until you raise it. But we have reduced it in the past. I mentioned 2013 earlier. When gold fell off the cliff that year, we had to reduce the dividend, and we had to reduce spending all through our business, and I think very successfully. And we have a manageable business today, like we did have in 2013. And 2013, amazingly, we even managed to generate net free cash flow that year, and that was very difficult. And so I think that's where we still sit today. In terms of return of capital, we've paid a dividend for 39 consecutive years. We'll continue to do that. Hopefully it's at the same level or higher. If things really do get kind of nasty though, we've also got the buyback available to us. That program we put in place last May, and we've only done about, I think, around $80 million so far. It's not a huge amount of money, but I think it is very consistent with our overall messaging, which is we're trying to create per share value. We're trying to increase the exposure for the shareholders to gold on a per share basis. So it's consistent with that message. And I think you do get the odd opportunity in a volatile commodity business to nip in there and buy back some shares relatively inexpensively. And so that's what that tool is there for. It's really the more discretionary part of our buyback program on top of the dividend.
So you just made something I want to follow up on. A unique element of Agnico's success is the gold per share measurement. Maybe you can just elaborate on that and tell us exactly or specifically what you look at to measure this.
Yeah, sure. The metrics I like most are the gold in the ground per share and the gold coming out of the ground per share. So that's resource reserve per share growth, production per share growth. And the reason I like those is because it has nothing to do with the price of gold, where if you looked at cash flow per share or EPS, obviously the gold price, which is not controllable, has a huge impact on that. And to that note, I should mention that we've never hedged gold and we never will, because we're trying to maximize your exposure to the metal on a per share basis. But if you look at Agnico over decades, we've actually been able to grow the gold in the ground per share and the gold coming out of the ground per share. And if you compare that to the rest of the sector, I don't think a lot of other companies have been particularly successful on that metric. There's been a lot of growth, but not really per share, because they issued a lot of shares. So Agnico has been successful, I think, partly by patience. We've been willing to largely self-fund ourselves. We've been willing to use a little bit of debt rather than shares, never too much, because it is a volatile commodity business. But we've come out with a pretty good result, and we're a much bigger company now. Therefore, it always does get more difficult to keep that rate of growth going. But I think with the existing pipeline we have, and with the tremendous EBITDA and cash flows that we have, I think we're in a great position here to just keep it trickling in the correct direction. And that's what we're after.
Agnico's Q4 results were impacted by cost inflation from labor, fuel, and consumables. Do you see this trend continuing?
Yeah, for the time being, I do. I think there's obviously still inflation in the world. The governments around the world are fighting that inflation by raising rates. They're continuing to raise rates. I think we're getting closer to the breaking point, frankly, right now. There's a lot of talk about rate cuts by the end of this year. I actually subscribe to that myself. We're getting into the zone of bank failure already, so I doubt they can push too much farther. But this should all be pretty good for gold in the end. And again, Agnico is pretty well positioned for that. But yeah, is there inflation? Yes. Labor rates, which represent about 50% of the operating cost of the industry, never go down. Normally, it's 1 to 3% increases. Last year, I think it was 4 to 5% increases for most. So you have to be more efficient in the rest of your operations by that, say, call it 2 to 3% per year, just to tread water. So it's difficult, but I think that also supports over the long term that the price of gold is just going to continue to go up, because there is, of course, a monetary side to gold, but there's also a fundamental commodity side to gold as well. And so I think that the whole industry is in good shape today. And I think when gold is released later this year from the strong US dollar, which has held it down, from the rapidly increasing interest rates, which have held gold down. If you think about it, gold around $2,000 per ounce in that scenario, that's pretty good. So I think as we get to the light at the end of the tunnel and rates being cut, that could just release gold and away we go.
David, as we wrap up, 2022 was a historic year at Agnico with the acquisition of Kirkland in February of 22, and also the consolidation of Malartic now that you own 100% of it. But what can investors expect for the rest of 2023?
Yeah, I think Agnico is going to be able to deliver this year. There's a few factors that give me that confidence from our guidance in February. As our executive chairman, Sean Boyd, likes to say, we view it as solidly achievable. And I believe that. I think we will have a pretty good year this year from a production perspective. I just talked about the gold price. I think it's going to support the financial results. But I think what's most important is we're able to tell this year a story to the investors that shows how we're going to continue pushing that pipeline forward. And there are a number of studies, Detour, Malartic, Kirkland Lake Camp, et cetera, that are coming this year or early next year that will be able to show that we'll be able to push this pipeline forward and hopefully grow gold production over time, control the share count, and thereby increase all those important per share metrics, proving why we're better than a gold bar, because of course a gold bar doesn't grow anything. In fact, if it's in an ETF, there's some sort of fee associated with it, so it very slowly shrinks. But the Agnico gold bar, I like to say, is just continuing to grow over time. And I think that's one of the reasons that people like to invest in this company.
And David, before I let you go, I just want to reinforce how much Agnico has grown in the 18 years that you have been with the company. But when you joined the company 18 years ago, what was the annual production then and what is it now?
Yeah, it was about 200,000 ounces per year when I joined the company, and now it's about 3.3 million. I think at the time, in 05, we had about 100 million shares outstanding, and now we have about 500 million shares outstanding. So the gold production's gone up 16-fold and the share count's gone up 5-fold, to my point of increasing the per share value for the investor.
That's amazing growth. Well, David, that was a great update and a great overview of Agnico, and I want to thank you for making time for us today.
Well, it's my pleasure, and thank you for having us on again, and look forward to next time.
Thank you.